Welcome back to the Portfolio Podcast. It's been about 3 months and we've posted and the rumours have been circulating. Where's he been? Has the Bitcoin crash wiped him out? Has his portfolio gone down to zero? No, I can assure you we're still here. Things are going to still keep moving. Unfortunately, I had a family member pass away. I've also had COVID, so I've had to take a bit of time to myself. But we're back. Things are going to change, so let's run a quick montage of what's happened while I've been gone, and then we'll get into the video. April's purchase was 20 shares in Siemens at an aggregate of £123.48 per share. Estimated yield 2.41%. Bitcoin reached an all-time high of $64,900, helping my portfolio climb to a peak value of £107,000. Penn Group paid a dividend of £13. GSK paid a dividend of £29.21. Ricardo bought their dividend back after pausing it due to COVID. Total dividend of £5.01. Realty Income Corp paid their monthly dividend of £2.54. LTC Properties also paid their monthly dividend of £3.45. SQM did a new share issuance, which gave me the right to buy 12 new shares. Fortunately, being from the UK, I was unable to use these rights and they were purchased from me. Total dividends for April, £78.52. Bitcoin crashed to $30,000. This brought my portfolio value down to £72,000. So I bought more Bitcoin. I also bought some Ethereum. Mondi paid a dividend of £21.74. Realty Income Corp paid their monthly dividend of £2.52. SQM paid a whopping dividend of 46 pence. Phoenix Group paid a dividend of £96.40. Legal & General gave me my biggest dividend ever of £115.02. Hypnosis Song Fund gave me a dividend of £26.25. And LTC once again with a monthly dividend of £3.38. Total dividends for May coming in at a record of £265.77. Bitcoin continued to remain subdued, reaching a low of $28,800. So I bought some more. I also bought 200 shares in Phoenix at an aggregate price of £7.29 each. I got my COVID vaccine. Pfizer paid me a dividend of £7.87 for doing so. Unilever paid me a dividend of £16.70. Reckitt Breckensire paid me a dividend of £14.22. Realty Income Corp, another monthly dividend of £2.55. Beatrice, dividend of 26 pence. Andrew Sykes Group, dividend of £21.85, also coming back after a pause during the pandemic. And another dividend from SQM for £7.34. KHC paid a dividend of £10.45. Trig paid a dividend of £42.59. DC Properties with their another monthly dividend of £3.48. Sun Life Financial with their quarterly dividend of £26.17. Total dividends for June, £153.48. Britvic also bought back their dividend after a pause due to the pandemic. Total £7.48. GSK with a dividend of £24.13. Realty Income Corp again with their monthly £2.59. Penn Group did a stock split where they issued 2 new shares for every 3 shares which you held. As part of this, they issued a special dividend in order to keep the share price roughly the same. This totaled to an amount of £681.60. I used the money from the special dividend of Penn Group and the monthly deposit into my account to purchase 165 new shares in Penn Group. Estimated yield of 1.7%. LTC Properties with a normal monthly dividend of £3.45. July total dividends £37.65. Though if we include the special dividend, it comes to £719.45. So without further ado, it's about time I introduce the biggest change to this channel going on. We have a new co-host. So Liam, welcome to the channel, sir.
Hi guys, welcome. I'm really happy to be here. Going to learn so much from Ryan, and hopefully we teach you guys as much as we can, and you can be successful in your future and fund your future, which is the main point.
So I think the key mistake you've made there, Liam, is you've presumed I'm an expert. This is not what it is, though, is it? We're on a learning journey together, if you know what I mean.
Yeah, but you're my mentor.
You say that. I've only got sort of the 2 years on you, and I've made plenty of mistakes, and we'll probably still make plenty more mistakes.
Much more experience than I've got.
Yeah. So yeah, why don't you tell a bit about yourself? What's your background? Where you come from? What you do?
Yeah, so I work at Jaguar Land Rover as my day job, and I've been investing now for about a month and a half. I want to build my portfolio to somewhere in the region of £1 million invested, so that I can get a decent living salary coming out of just my investments by the time I'm 40 to 45, in that sort of region. Within that, I also want to try and buy some properties. Now, I'm not on a massively high wage like compared to these millionaires, but hopefully I can still hit those amazing milestones and get to somewhere where I can be self-sufficient and financially independent.
Yeah, so it's part of the journey, though, isn't it? Like we're trying to show, look, we're from normal backgrounds, normal upbringings, and
yeah,
it is
exactly
possible. It's something we can do as long as you just are consistent with it and focus on it. So
yeah, set your mind to it and set your targets. That's what I've done now. I've wrote down my list of targets, and I'm just going to keep checking them every few months, make sure I'm on track to hit those targets.
So that was one of the big things we spoke about, wasn't it? Because we said about, oh, make sure you set yourself some targets, set yourself goals of where you want to get to, and make sure those goals scare you a little bit. Because I always try and keep 5 years ahead and look 5 years ahead of where I'm supposed to be, and then go, right,
Yeah,
okay, I have no idea how I'm going to get there, but we'll figure it out along the way. So it's good that you've done that.
yeah, yeah.
So
I've tried to lay out how much I want in dividends to be coming in at the end of each year.
yeah,
So by the end of the year, because I've only just started, I want £100 dividends coming in, like lined up for 2022.
mm-hmm.
By the end of 2022, I want to be hitting £500 dividends a year coming in. Now that's quite a big target for me because I'm in 6 months, well, just short of 6 months, and trying to aim for £100 dividends, and then I'm trying to forex that next year in just twice the time.
And that's exactly it. And once you start getting that compound rolling, that snowball going, you really start to notice a difference. I mean,
Yeah,
we've looked at some of the graphs previously on mine. You just see that the line starts going upwards, and I'm still at the early parts, if you know what I mean. So it will keep climbing. You will get there. So it's good to see it coming from absolute square one where you are now, where you've literally opened your portfolio, what, 3 weeks ago, 2 weeks ago, if that. And,
yeah, I think it was about 3 weeks ago now. Yeah, and I'm starting to see some profits in the share prices going up, and it's making me feel happy. But I know that's not the end game.
Yeah,
the end game is those dividends.
yeah.
Which I'm yet to see one, but apparently I've got one coming in next month, I believe.
Oh, flipping it, which one's that one from?
I would have to recheck, but I'm pretty sure it's Coca-Cola.
Oof, nice. So they do a quarterly, don't they? Which is pretty good.
I think so.
Self putting on the spot here. See,
Yeah,
this
I
is
know,
what happens
tell me about
once you get addicted to it. You're sitting there, you're watching it all the time. You know exactly what day your next one's coming in, exactly how much it's coming in. It's like, oh yeah, today's lunch is sponsored by IBM.
it.
That's
Yeah, I mean, my favourite one at the moment is Pets at Home getting a massive stock price hike, and I'm really loving it. I'm at nearly 9%, I think. And in 3 weeks, that's just ridiculous to me.
Yeah.
You know, that's my biggest single mover.
Yeah.
Um,
We'll get into the detail of your
That-
portfolio in a bit, and what
yeah.
you've bought and what you've started yourself off on. So, but what I wanted to get to really majorly is what's your background in investing, what's your experience, what you do, because I know we've spoken a lot, but it's good for people out there to know what you used to do and why you made the change from what you used to do.
So I joined a company called IM Academy, which is a forex education academy and training provider. I started trading forex. I was winning some, I was losing some. I was winning more than I was losing, so I did end up in profit, but it just wasn't the profits I wanted to see, and what I thought I could get from forex for the amount of time I was having to put in. Whereas with this sort of investing, I've got a fairly, for me at the moment, for how early days I am, quite a diverse portfolio, and I'm not having to spend too much time like re-investigating those companies like in the short amount of time. Whereas in forex, I was looking at, you know, United States dollar versus British pound hourly, every day, 5 days a week, just trying
You
to
were
get
talking about
£3.
micro pipettes, weren't you, when we were talking about it? And I was like,
Yeah. Well, because all my trades were leveraged 1 to 100, 1 to 200, and I was trading things like Bitcoin US dollar as a currency pair. Every 0.0001 Bitcoin was worth something like 500-600 quid to me.
Yeah.
So that tiny movement could either wipe me out or make me rich. And it was just a lot of risk. I mean, it was all managed risk, so I would never lose more than 2% of my portfolio at any point.
Yeah.
Of my forex portfolio, that is. But still, it was a lot of risk for how much time you had to put in, and it's just a lot to deal with. A lot of charts, a lot of like phone notifications just going off. Oh, we should buy here, we should buy there.
Yeah.
Whereas investing seems like a lot more calm and a lot lower risk.
I think it's a path almost everyone follows in the end, though, because I've done it myself in the past. Is you get into, oh yeah, I'm going to day trade, and you end up doing leverage trading, and you have notifications, especially if you've done it in the crypto world like I did, or even the forex world. It's 24/7. You've got notifications going off at 3 a.m. and it's like you've got to trade, and you look at it, and most people aren't profitable in that field. If you're okay at it, you can be mildly profitable, but then you look at the amount of time and effort and lack of sleep you put into it. and
Yeah.
you
Now, if you can get a funded account, then you're perfect. If you can get a 50k funded account and start trading and earning that couple of % a day, you're balling. But when you got a grand and a half in an account,
yeah,
that
it's a long way up.
percent a
But
day is
the
not a
idea,
lot.
yeah, the idea is to build it up, and it's
Yeah,
that initial.
compounding.
Yeah,
But that's what we're going to be doing here, really, with dividends. Is all my dividends. My plan is to reinvest them, every single one I get, until I hit my end target, which is that 30 to 40 grand a year coming in dividends by the time I'm 40 to 45
yeah,
years old. So it's a long target and a big target, but
yeah.
it's worth it like for the long term.
But that's exactly it. And the thing is to get to that stage, hopefully, I mean, you're on the same wavelength to me, is to get to that stage where it's like, right, okay, well, my salary is the same as my dividends. So I'm working because I choose to work or I enjoy the work and not because
Yeah,
I have to work. So if it gets to a situation
exactly.
where,
Alternatively, because you want to double your salary.
yeah, it might be, yeah, that's another option. If you want to live the lavish lifestyle, then exactly go for
Yeah,
it. But the way I look at
that's
it is that
me.
I don't want to be in a situation where I'm having to force myself to go to work. At the moment, I enjoy work. I enjoy
Yeah.
what I do most of the time, so it's not really a problem. But later in life, I might decide, nah, I don't particularly want to be doing this. I don't want to be getting up at six,
Yeah.
5 in the morning to get to work. So
It's the push for early retirement, effectively,
exactly.
which is what we all want. We want to be 55 or maybe even 60, and touring the world on a cruise ship.
Yeah.
Like, that's my dream when I retire,
Yeah.
and this is my way of getting there, hopefully.
Yeah. I feel you on that one. I feel you on that one. Just out of interest as well, is how did you find out about your forex stuff? Sort of what got you involved in that in the first place?
Yeah. So I've been interested in forex for a long time, just because of how big it is on Instagram, and it became like most of my news feed.
Hmm.
Um, and then I found out one of my mates was doing really well on forex, so I phoned him up, asked him, how he's doing it, how he's seems to be doing really well out of it. Everything I saw was really positive.
Hmm.
So in the end, I ended up joining the IM Academy, as I said.
Hmm.
Um, it's got great education on there. It's got great live feeds from loads of educators that are absolutely minted from forex. But
And
it
all
just
the affiliate marketing that goes with it.
it was an MLM company, so it was all about, not all about, it was about affiliate marketing as well.
Yeah.
So you were trying to recruit people in, but there was no push for it. So that's the only reason I joined, was because I was promised there's no push for you to try and recruit people. Like, it's about the forex, and it genuinely was. It's just that the amount of time you have to put in to get to where you want to be.
Hmm.
When you're working full time, if I wasn't working, I was doing it full time, and I had a funded account, then I'd be making good money off it.
Yeah.
But to get to that point, it's a lot of work. You're working 5 days a week, as much as you physically can.
Yeah.
Look at charts every day,
Yeah.
and whereas this is more analytical. You go into the reports, the annual reports, the quarterly reports, understanding what the true worth of a company is, and then trying to, understand where the value can be added. Where can you see this stock price going to in the near to long future?
Yeah.
Yeah.
Absolutely. I mean, I suppose the only worst thing is mentioned is that you mentioned, obviously, we've discussed it as well, is that you're probably still going to have a small pot off to one side for play money,
Yeah.
and just to keep
I've
you
still
up
got
because
500 quid in there.
it's entertainment at the end of the day, isn't it? I mean, I used to
Yeah.
enjoy it as well. So if you fancy it, then it's there, but it's not your main
Exactly.
thing now, is it?
Exactly. Whereas I was trying to use forex to be my salary,
Yeah.
and that's a long way off. I mean, you can talk about 4% a day, 5 days a week. Within a year, that's 200 odd grand,
Yeah.
but a lot of work. And the best times to trade are when we're at our day jobs. Between 10 and 3 is the perfect time to trade on forex, and I'm dealing with battery cells and stuff at work.
Exactly. I
It's
mean,
not really feasible.
I'd be interested in the comments if anybody else has had experience with forex and what people's experience were. I mean, I'm trying not to make this. Obviously, it's not a shove it down your throat or you're going to get rich quick. It's none of that. This is a sort of open, honest talk about real people doing real investing and their real experiences. So if anybody's got any experiences like that and they want to tell us about it down in the comments, absolutely go ahead and do it.
Yeah,
we'd love to hear from
definitely.
you, sort of thing. So.
I mean, I love forex. I absolutely love it. I think it's a great fun. But do I see it as a long-term investment? No. A couple of comments that I saw on your videos from when Hanny was involved, and it was a guy called Lee Smith, and he's brought some really decent comments I think we should probably touch on before we like continue forward. So the
Yep.
first one was he spoke about AER, which is actual exchange rates, and CER, constant exchange rate. I know you were interested in talking about that, so I'll hand it over to you.
Yeah, so this is the thing I like. I like these good comments and feedback comments because obviously we're still learning. We go through things on this, so he's actually broken down, explains the difference between them. So CER strips out the fixed currency exchange rates over the period comprises. So I think a lot of large companies, I don't, again, correct me if I'm wrong, I think a lot of large companies actually hedge against currency exchange rates. I know the company we work for does as well. They actually are engaged in the forex markets, for want of a better phrase. So if, say, the US dollar has a massive tank by like 10% for whatever reasons going on, or it has a massive spike by 10%, they actually mitigate the exchange that's going there. So I think it's a good point, and it's thanks Lee for coming back about this and explaining the difference between the two, because it's definitely taught me something. So, but yeah, he's
The
posted a
second
few
one
comments.
was so the second one. So this was all posted on the GSK video, the GlaxoSmithKline
Mm-hmm.
video. He posted Nicola and Neo are two different companies. I don't know. Obviously, I wasn't involved in that time, so can you just talk about that a little bit?
Yeah, I think I need to have a deeper look into that one. I believe Neo was the ticker for Nicola at the time. I might have got that wrong at the time actually, but yeah, I'm definitely going to go
Right.
back and
Okay.
double check that one and fact check what one and
Okay. So we'll look at that in a future episode, maybe.
Yeah, absolutely.
Yeah. Real. Okay. And then the final comment. This was quite a big paragraph. So he's basically talking about a split because customer goods companies tend to trade at higher PE ratios compared to pharma. I think Unilever and Reckitt. By splitting, they hope the consumer company would get a higher rating and pharma will not have too much of a reduction in the PE ratio. The hope, anyway. And he said, who knows what will actually happen. Do you have anything to comment on that one?
Yeah, I think he's talking sense there. I mean, talking about the PE ratio is really important. I mean, it's definitely something you need to look at, profits versus earnings. And this is all part of building that balanced portfolio. Is you have those riskier ones and you have those ones that pay you higher dividends and you have your ones that pay you lower dividends and are more consistent. So it's something we've spoken about quite length, is actually right. Okay, just because it's showing it's got a 8-9% dividend, that's not necessarily great, because if they're paying out
Is it
100%
actually?
of their profit, it might not be sustainable. So
Yeah.
it's about managing that risk and balancing it, and that 4% target is roughly what we aim for,
Yeah.
because it's down the middle line and it gets us to that the sort of income we're looking for. So yeah, but
Yeah.
fantastic comments from Lee. Obviously, keep things coming in. Sorry it's taken so long to respond to them. Obviously, that's already all been explained, but
It only took 2 months.
it's fine. But we're back now. It's going to be weekly, so
Yeah. Yes, indeed. We're going to go on to a little bit of a plan for the channel now. So if we just go to the next slide, we're going to go through our getting started guide for newbies. So we're going to talk about brokers. We're going to talk about funding your first account. We're going to talk about safe, nice stocks. We're going to do our company analysis. We're going to look into stock reports, quarterly reports, look at the director statements, understand their financials completely. Then we're going to move on to portfolio management, and we're going to look at how you should be, we believe you should be funding your account in a strategic way so that you can maximize your future earnings. So when you get to that, hopefully, early retirement age. And then finally, looking at trading strategies that are available and how we choose to trade and why that is, why we choose to trade in a certain way. Make sure if you post anything about us on Instagram, use our new hashtag #TPPFundYourFuture.
Absolutely. I think it's good to do. I mean, we spoke about doing a sort of more educational series as we went through as well, and that's definitely something we're going to include with. But we're going to keep on, as you mentioned, with doing the actual stock analysis and stock reviews and looking into individual companies, especially focusing on those. I mean, I generally do one purchase a month. You'll probably end up in the same boat eventually, and it'd be good to actually sit and look at those two companies. So there'll be a sort of mix as we go on between educational series talking about a particular topic, and let's talk about a company, and let's talk about our portfolios for the week. So there should be a nice balance and mix between the two of them.
Yeah, definitely. I'll be trying to put in around the £700 to £800 a month mark into this account, and I'm going to try my hardest to put my trades on live if we can, or well, pre-recorded. But during the YouTube video, I'm going to try and put my trades on so you can see me trading. Okay, so that hopefully gives you a bit more confidence in us. Should we move on to what I currently have in my portfolio? I've ordered these by my currently most profitable in percentage, because I want to show off the nice stuff first.
Yep. So this is the money you've obviously taken out of your old forex trading account and
Yeah.
to purchase.
So I took it.
It's quite interesting to talk about the emotional side of this, because I remember when you first put it in, there was that 3 or 4% crash on the day or whatever happened during the day, and you messaged me going, "It's all red. I should have waited," and this, that, and the other. But it's really key to
Yeah.
talk about that emotional side, because you have to remember
Yeah.
it's a long term thing, and a 3 or 4% crash on the day. 2 weeks later, and look, he's in the green. If you know what I mean. So
Yeah. So yeah, I chucked 100 quid into pets at home. I think I got a pretty good price, seeing as I'm nearly 10% up, which I'm massively happy with. Um, Coca-Cola was my first stock. I bought 2 units of that. About this is my very first stock. So I bought Coca-Cola. I bought Realty Income Corp, which is O, and the rest of them I then bought on a buy order later on. I love my Coca-Cola stock. I'm planning on putting a fair amount into there because I think they're quite a secure investment from what I've seen in their reports.
Yeah, I do call you out every time I catch you drinking a can of Pepsi.
Yeah, because I prefer Pepsi, but everyone needs to drink Coke. Portfolio people, drink Coca-Cola, please.
All right, one
Yeah, so Realty Income Corp, one of my first ones that I bought alongside Coca-Cola. Still doing pretty well, 5% up. Can't moan at that.
Yep.
BP Carey, IBM, Trig. This is the one that Ryan actually showed me about what must have been a couple of months back before I even started trading. And I literally, as soon as I started trading, I called it up on my wish list, and me and my friend went through their annual report and saw immediately why Ryan has it.
Yeah. It's straightforward. It's in a growing market sector. It just pays out, and it's one of those. It's almost like owning a stable energy stock as it is now. And it's the same thing, but it's in renewables, and renewables are just going to continue growing given the current climate. So
yeah,
it's a safe bet as far as I'm concerned, and I will continue to buy more of it going forward.
Yeah, definitely. Now I've got a 3M. Now I thought that they only made tape because that's the only thing I see their name on. And then I read their annual report, and I'm like, these guys have made ventilators for COVID, and they make medical devices, and they make pencils, and they make everything.
This is one of the things I love about this, is you find out about companies that you don't normally see in the public domain. You think, hey, this is a massive company that does so much in the background, and I've never even heard of them. And then it opens up an entire new world. Like Phoenix, for example, you've got on there. You would have never heard of Phoenix unless you look in investment.
Never heard of Phoenix.
You suddenly realise it's a multi-billion-pound company that does a huge amount.
Pay out a pretty good dividend.
Yeah, exactly. So
the only one that's in red, Legal and General.
Oh, minus 0.6%. Oh, what are you going to do?
Look at that. If we were to take all these percentages, I mean, I'm up, what's that, 20?
That's just over 2%, 2.5%, something like that. So
you can't really moan at that. I've been in the game for 3 weeks. Yes, it'll go up. Yes, it could go down to zero. It could go down to negative. But
yeah,
at the end of the day, I'm playing the long game for those dividends. And and my first dividend, I cannot wait. Yeah, exactly. Whereas in forex, it goes red. You're like, it's red. I'm going to lose so much money on this 100x leverage trade.
Yeah, exactly.
Whereas with this, it's all my money is my money. Whatever I earn, it's no leverage. It's just trading.
Yeah, exactly. And you're investing in the security of the company, and you trust in the company. So if it goes down 20%, as long as their fundamentals still match up, then the way I look at it is, the company's on sales, I'm getting a better dividend yield, and the stocks are cheaper. I can buy more of it. Fantastic.
Yeah.
So it's a great one to look at.
5% off.
Yeah, exactly that.
Yeah. No, so that's my portfolio. I think it's a fairly diverse portfolio so far. Obviously, I want to add some. I think I want another REIT probably, and I definitely want to look more into like the battery tech. I think that's a really good way to go, and maybe look at some hydrogen research companies to see, like hydrogen fuel research companies. I think that's a really good way to go, because I think that's the next stage for things like Formula One. And they'll be the first guys.
And this is exactly it. Is pick companies you're interested in, pick topics you're interested in, things, and understand, because
Yeah.
obviously there's some sectors, yeah, you invest in, like pharmaceuticals. I am not an expert on pharmaceuticals, but I can look at the company and go, yeah, okay, they're all right. But the best performing ones are
Yeah.
generally the ones that you're most interested in and know most about the actual area. Like, I'm just trying to think of an example, but I wouldn't go invest in probably a high-end clothing brand, for example, a fashion company, because I have no interest in fashion. I mean, you can see I'm sitting here wearing a t-shirt. Like, I wouldn't look at it going,
Does
oh,
that count?
yeah, yeah, you're classier than I then. But this is it. I wouldn't sit there and look at it and go, oh, well, oh yeah, I know this company's coming out with the latest fashion trends and they're going to be pushing the market and it's going to be the greatest, because clueless.
Yeah. Don't have to tell me.
Exactly.
I
I
think
wake
I
up, I
think
wear a
one that I'm
shirt
going
to
to
work, I
really
wear gym clothes, and I come home, and that's it.
this is my wish list. I've got Morrison's on there. One that I'm actually really interested in. I think we should definitely do a video about very soon, and I'm actually going to write that down because it's a great company that's about to be bought out, and I
Yeah,
feel like
yeah.
we've got a lot
There's
of
a
potential
spike to
there.
write about on
They're
that
about
one.
to
Yeah,
be
it's about
bought, yeah,
40%.
$6.3 billion deal,
Jeez.
and they're offering a one-off payment that is a dividend payment that is nearly £1. So it's something, I think, don't quote me, but I think it's about £1 more than their current dividend
They
per
do
share.
special dividends, some companies do, so yeah, it's definitely one to talk about.
Yeah, it is special. It's a one-off,
Yeah,
just because of this buyout. So they're giving their shareholders a bit more. But it's definitely one that I'm very interested in, and I think that could have a lot of potential.
cool,
So I think that's one we definitely need to look at.
cool. We'll have a look at it. Fantastic, cool.
Yeah.
Well, I think that'll do us for an
Well,
introduction, don't you?
yeah.
Fantastic.
Thank you, portfolio people. I'm really happy to be here. I can't wait to get going with all of our
Yeah,
different ventures we're
fantastic.
going to try and start this channel.
Fantastic. Welcome, Liam, to the channel, and we'll catch you all next week. Adios.